Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra.
Hello and welcome to Kitco News with me, Paul Harris. We're at the BMO Metals and Mining event in Florida in the United States. This morning we're talking about copper in South America, and if I may be as bold, one of the most exciting exploration projects to have arrived in recent years. For that I'm joined by Daniel Earle, President and CEO of Solaris Resources. Good morning, Daniel.
Good morning, thanks for having me.
You're more than welcome. Now, you've got the Warintza project in southeast Ecuador, which is you're in a porphyry copper zone, a district, an emerging district. You've had a number of discoveries there. You've had some amazingly wonderful drill hits, kilometers of, near enough 1% copper equivalent. You've set the market alight. You must be very happy how things have gone so far.
Yeah, absolutely. We're very pleased. Couldn't be happier with the way that the project has evolved. But it's important to always, whenever we begin one of these conversations, to just acknowledge that the credit for Warintza resides with David Lowell. David was the world's greatest explorer, certainly in copper. And unfortunately, he passed away a couple of years ago. But it's our job to bring the Warintza project to its full fruition, to do that for David. And then even beyond Warintza, within our portfolio, as you know, we've got David's next targets for discoveries, and so we'll see drilling on these in respect of our Chile project with our joint venture partner Freeport-McMoRan has a significant program planned, and then with our wholly owned Peruvian projects, we'll be looking to drill those ourselves as well.
Okay, so Warintza was one of the discoveries of the previous copper cycle, sort of 10 or so years ago. And David was able to sort of get an initial resource there of what is now Warintza Central. Your drilling, you've made a discovery at Warintza East, Warintza West, and Warintza South. And you're very soon to release a resource on Warintza Central. So you've been very busy. What are the sort of key milestones coming up this year?
Yeah, that's right. Well, so David, as you mentioned, he did a significant program for greenfield exploration at the time. This is an 80 cent copper price environment. Funding wasn't what it is today, and he basically drilled off in 6,700 meters of drilling the resource that we had published in 2019, which was was at the threshold of an economic project, given the way that copper prices have been marked higher. So that was 124 million tons at 0.7 copper equivalent in a less than 1-to-1 strip ratio pit. So effectively, that was the beginning of a starter pit, and also the beginning of what we were building on with our drill program. And we've been clear from the beginning that what we saw here was the potential for a world-class mine. And so we set out to establish those credentials. And we set the goal of doing that through establishing a 1 billion ton inventory in a low strip ratio open pit with a high grade starter pit, building on David's drilling in the outcropping portion of the supergene zone, a high grade starter pit to really front end load the grades in the mine plan, and therefore the cash flows, and drive that rapid capital payback and high returns across a whole series of important financial metrics. So we've essentially now completed that drilling program, and the way that it's evolved is that the central zone has turned out to be significantly larger than what we set out to drill. And in fact, just in the release that we had on Monday, this will be the second last hole going into this forthcoming resource update. We've hit the highest grade interval of near surface mineralization that we've ever reported. So literally at the edge of what will be this resource update when it's published. And so that'll be something, of course, that we'll be immediately following up on in our future drilling program.
Okay, thank you, Daniel. Now, a 1 billion tons, can you sort of give us some context of what 1 billion tons means, what potential copper production that could produce, or maybe even a similar operation that's already in production that with a similar sort of size ore body?
Yeah, I mean, if you look at Mirador, which is about 45 kilometers down the highway from us, that was developed by the Chinese. This is a very low cost district, both from a capital and an operating cost standpoint. And so they put that mine into production at 20 million tons per annum for about $1.4 billion. That's less than half the capital intensity of bringing a project online in the high Andes of, say, Chile or Peru or Argentina. And then the same thing flows through in terms of the OPEX with the low cost environment that you have: low elevation, low cost labor, freely available fresh water, low cost hydroelectric power, and so on. So they're pumping out about 100,000 tons per annum of copper. They've got an expansion plan to double that. And even at that lower rate of production, they're well into the lowest cost quartile for production globally. So that gives you an idea, and that would be about a 1 billion ton inventory that they were working with there. So that gives you an idea of kind of a baseline of what you'd be thinking when you're looking at, for example, Central.
Okay, so as and when this resource comes out, let's assume it is 1 billion tons, give or take, what will be the strategy then? Will you be looking to sort of go forward to an economic study, or will you sort of perhaps step back and say, we've got a lot of drilling to do, Warintza East, Warintza West, Warintza South, and some of the other sort of nearby targets? Will you sort of focus on that to really sort of expand that sort of resource you've got in that Warintza district?
Yeah, well, the vision from the beginning, again, was that we had a world-class mine. And so we set up a strategy to quickly go to that threshold of a world-class inventory at the 1 billion ton mark, and to drill it to a high confidence category so that we could go straight into reserves and then permitting and get this project headed towards production. And the way things evolved, Central is now significantly larger than what we set out to drill. And not only that, it's growing in high grade. So we basically, 1 billion tons was something like 1,000 meters starting from the west, drilling out to the east, and then down to 1,000 meters depth. And if you followed our drilling, you've seen that we've gone from 1,000 meters to 1,100 meters, 1,200, 1,300 meters, and then stepped out further than that and made the discovery of Warintza East, which is now an overlapping deposit from Central, and undoubtedly will be part of the same pit development. But chasing the high grade, we made a turn when we got out to the eastern edge, made a turn to the northeast, and then we've been growing significantly. We're something like 650 meters now to the northeast in that drilling. And again, the highest grade interval that we've ever reported in hole 48, the near surface portion was 100 meters of 1.6% copper equivalent within a broader 850 meter interval. That is the very edge of the drilling. And so it's now incumbent upon us to continue to trace that higher grade mineralization. We've got that hole was a 200 meter step out. We've got platforms to support a further 200 meter step out and then a further 200 meters beyond that. And we've got mapping work identifying the outcropping copper beyond that. And so it's very exciting. And this high grade, of course, has an outsized impact on economics. And that's why it's important for us to continue drilling this and then making sure that we get all of that inventory into a subsequent resource update to then use for an engineering and economic study.
So you very much got the champagne problem. You keep finding more and you keep finding more good stuff, which kicks the can down the road of when you can do when it's the right time to do that in the initial economic study.
It does, but the technical work proceeds at pace. So we've got a robust technical program underway under the direction of Chad Woollahan, our VP of projects, and Chad has a lot of experience with this. He was responsible for the technical programs at Ivanhoe's Kamoa project, from basic engineering through PEA and then feasibility and into detailed engineering. And that is one of the best examples of a new greenfield development that the copper industry has ever seen in terms of its performance. So Chad is employing the same program for us with top quality consultants. So all of that technical work, from site layout and infrastructure under Osenko, to metallurgy under FL Smith, to geotech under SRK, and then on down the line with all the various technical programs. That's all underway. So that doesn't stop. We continue with that work, and it'll dovetail with a subsequent resource update where we can hopefully fully reflect, a much larger high-grade starter pit.
Okay, your share price since you IPO'd a couple of years ago now, almost a couple of years ago, you've gone from about, $1.50, $1.90 to $15, $16. We're at an investor event. What kind of meetings are you having? You got a lot of funds? You got a lot of corporates? Who are you speaking to here?
Well, I don't want to give too much away, but it's a whole mix of meetings. I think there's broad interest in large scale, robust greenfield copper projects. And it's not even confined just to the copper industry. I think everyone really across the commodity space is seeing that copper is the integral metal to the mega trend of electrification and digitization and decarbonization and so on. And so I think everyone wants to be in that space. The challenge is that the pipeline is just so depleted. There's been so little exploration success that there's just a lack of opportunities for people to get involved with.
Okay, let's take a little bit of a step back and a step back into your past, if I may. You were formerly a very well recognized analyst on the street. So you've got that sort of the ability to have that very high level view of what's going on and why. The copper price has been, what, $4.50 a pound for a couple of years now. We haven't really seen a lot of developments coming along. Albeit there's not a lot of projects in the pipeline. We also haven't seen a lot of M&A activity, even though a lot of companies talk about a $3.50 a pound incentive price for doing stuff. What do you think is going on, and why is there this perhaps reticence to act from some of the bigger players in the space?
Well, I think it's a function of, the M&A cycle always operating with a lag to the copper price cycle. And so the copper price bottomed in March 2020. Typically, it's 18 months before you begin to see even the first M&A. And that's exactly what we saw. We saw a number of three transactions really in the final quarter of last year. And that's really the very beginning of what I think is going to be a very powerful M&A cycle across many, many years. If you look at the last super cycle as a reference, you saw something like, and this was the China-driven cycle, beginning in the mid-2000s and then running into the post-GFC period. And you saw across that cycle something like 35 transactions in copper. But remember, the gap that needed to be filled, so the forward deficit of supply relative to demand in that cycle is less than half of the gap that we have to fill in this cycle. And the difference with this cycle is it's not just driven by China's rapid, economic growth and industrialization and urbanization and so on, but you've got a global push to decarbonization. And it's not set to stop after a decade, as in the prior cycle, but to actually continue accelerating out into the future. So you've got a much larger gap. If you look at, for example, the amount of copper that the industry needs to add, just this decade is equivalent to the entire China super cycle. And then next decade, you've got 2 more Chinas that you need to add. So I think Mike Henry at BHP summed it up, or framed it a little bit differently. He said essentially the copper industry by 2035 needs to double itself. And so that's just a monumental task. When you consider that, in the last cycle, the gap was ultimately solved by brownfield expansion, from the mega mines in the industry, which represent, the top 10 would be about 25% of the supply, and expansions again at those assets. Those very same assets are actually rolling off, and they're a drag on supply come the middle of this decade. And so the future of this cycle is very much about greenfield, and there's just a dearth of opportunities in the greenfield space.
Well, that's sort of very interesting. This week, the big news, arguably, in the copper space was BHP investing $100 million in Filo mining. Solaris Resources is currently sort of independent from that point of view to a greater or lesser extent. Is that something that's attractive to you, having one of the big guys write you a big check? Or do you see sort of better value in maintaining your independence, continuing to work up the project, continuing to build the resource, continuing working towards putting some economics on there?
Well, first of all, it's just fantastic to see, so leadership on the part of BHP, obviously, and then success on the part of the Lundin Group for top class operators in our space. They really set example for everyone else to follow. I guess the way that we look at it, we've got, in the Augusta Group, a track record of something like $4.5 billion of exit transactions in the last decade across multiple companies. And so certainly the principal of the Augusta Group, our executive chairman, Richard Ward, he's an old hand at this. And, his imperative is always about preserving flexibility and preserving, assets, the sanctity of assets without encumbering them with offtakes and debt and royalties and streams and so on for as long as you possibly can. And if you think about the trend in copper, which I think there's now a consensus forming that the trend is going to be higher over time, then certainly there's even more merit to that kind of an approach.
Well, thank you, Daniel. In addition to it being a big check into a junior, I think for me, one thing that stood out is, BHP going into Argentina. It's not a jurisdiction where, if I think I'm correct in saying, they've really been active in the past. That's in many ways a stamp of approval on that emerging jurisdiction. You're in Ecuador. It's another emerging jurisdiction. You mentioned Mirador earlier, which put copper mining to production. Lundin Gold's also had great success in Ecuador. How is Ecuador as a jurisdiction? What is the feeling you're getting from the government there regarding mining?
Well, look, Ecuador, since it opened its mining sector in 2014, it's got a clear track record of cutting taxes, cutting royalties, and streamlining permitting. And this is actually accelerated under the new president, Guillermo Lasso, who was elected last year. He's a conservative from the private sector, successful before he came to politics, and a real enthusiast for the power of the private sector to drive economic revitalization. And he singled out the mining sector as one of the key pillars of his economic plans. So he's calling this the decade of mining in Ecuador, and calling out to industry for billions and billions of dollars of investment. And it's not just words. He's actually taken the steps to ensure that this vision is realized. So you would have seen, for example, in August, the signing of Executive Decree 151, the mining decree, and that put in place the next series of regulatory reforms that were going to be made to make this happen. And not only that, but also commitments for capacity building in government to ensure that the government has the ability to process all these permits with the rush to develop projects and take advantage of the opportunities in the country. And then more recently, and I think probably more important, the new investor protection agreements under Lasso. And what these do is they go to the heart of some of the uncertainties around Ecuador as a jurisdiction. And so these investor protection agreements, they lock in place and provide for security of mining regulation under the term of the agreement, and title, and security of investment, all subject to international arbitration. And then on the fiscal side, they provide for the next round of incentives, which includes cuts to taxes on the repatriation or remittance taxes, import taxes, and a further 5% income tax reduction for new investments in the mining sector in Ecuador, and then freeze it all in place for the term of these agreements. So I think he's, under the Lasso administration, he's got an understanding of the profound opportunity that exists given the rich geology in Ecuador and the needs of the global economy for copper development in particular, but also other metals that Ecuador is rich in, and their opportunity and window to see that this happens is now.
Thank you. Now, one of the sort of key themes at this event here has been sort of ESG. Mining or hard rock mining is relatively new in Ecuador. So I imagine the sort of communities aren't necessarily very familiar with some of the processes and concepts. There's obviously environmental issues to take into account. You've been sort of quite innovative, if I may use that word, in your approach to dealing with, working with, collaborating with your local communities, bringing some of the better things that companies do in Canada and sort of using those tools or methods in Ecuador. Tell us a little bit about your approach to ESG in Ecuador and helping local communities, local government understand the sort of processes of an exploration and development project cycle.
Yeah, I mean, that's absolutely been the key to our success. And so that's really a modern view of project development as going alongside community development. And you can't have success on the project development side without that community development there. And this is something that, a program that we would have put in place anyway for that reason, but it just happens to dovetail with the vision for the Lasso administration for the rapid build out of the mining sector in the country. So Lasso truly understands the importance of sustainable approaches to drive increased social acceptance to facilitate this rapid and large scale build out of the mining sector in the country. So you can see in our program, for example, the elements, as you mentioned, of best practice from other jurisdictions that we've been able to apply in an effort to try and raise the standard and provide a template for others to follow in Ecuador for responsible mining. So things like, for example, completing the first ever community consultation, government-sponsored community consultation in line with the principles of free, prior, and informed consent to establish a consensus around the project, and then to formalize this in an impact and benefits agreement, again, the first ever in Ecuador with their community partners, to provide for the certainty of community support, not just for the exploration stage, but for the development of a large-scale open pit mining and milling operation, and then all the way into operations through to closure. And then more recently, signing on to the National Zero Carbon Program. This is one of the important initiatives under the Lasso administration that we were happy to sign on to. We think our project is a natural candidate for a zero emission project, and we're going to be building on this. I think in the near future, you'll see that we've been working to secure 100% renewable power supply for our project with the state grid operator, which is already providing 2/3 hydroelectric power. But the largest hydroelectric project in the country, Santiago, is adjoining our project to the north as well.
Okay, well, let's close on a sort of perhaps a more mundane matter. Drilling 1 kilometer holes is an expensive business. You've got a lot of drills going. You're doing a lot of drilling. What's the financial situation of the company? When are you likely to have to go back to market to top up the coffers?
Yeah, so we last reported $47 million US on our balance sheet, and then we've got a significant, something like $82 million Canadian of warrants that are in the money. And 55 million of those are due this year. So we've got funding in place for our program through the year at least. You've got to remember that the cost-intensive program of resource drilling is now behind us. So what we're focused on going forward is very much high impact but less cost-intensive efforts aimed at growing the high-grade starter pit. With, for example, the highlight that we published from our drilling on Monday in hole 48, 100 meters of 1.6% copper equivalent in the near surface interval within a broader interval. That's at the very edge of drilling. And so it's the imperative for us is not to go out and drill another 1 billion tons or 2 billion tons, but to keep hitting mineralization like that and just keep chasing that trend of mineralization so that we can maximize the high-grade starter pit, which is eventually included in engineering and an economic study.
Excellent. Well, thank you very much for such a deep and engaging conversation, Daniel. I know I'm not the only person looking ahead anxiously at what the resource will be when that comes out in the near future. Daniel Earle, President and CEO of Solaris Resources, thank you very much.
Thanks for having me.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,